Hey everybody, my name is Jesse Regali, and in this video, I talk with a fintech and real estate leader. His name's Justin Hughes. He is the former CTO and co-founder of RealtyMogul. RealtyMogul is a crowdfunding real estate platform, really cool company. But we fast forward to today, and he started a new company called Joyhub. We talk a little bit about that. Joyhub offers a free way to remotely manage rental units. So for landlords like myself, and maybe like yourself, it's an interesting platform, and it really has the technology that you'd come to expect for 2020. Anyways, in this episode, we talk about his investing career. We talk a little bit about RealtyMogul and his new venture today. If you're at all interested in technology and real estate investing, I think you're really going to like this conversation. Maybe a bit of a background. We briefly talked about how you were previously a co-founder for RealtyMogul and now co-founder again with Joyhub. So it seems like you like starting companies and you like the real estate space. So what we could maybe start off with was how did you get into real estate and where you're at today? Because from our previous conversation, it wasn't a complete direct path there.
Yeah, sure. So yeah, as you said, I love technology. I love real estate. And I do love building things and starting companies. And I mean, obviously, I guess I do have a bit of a pattern starting real estate technology companies. But yeah, so how I got into real estate, I didn't have much exposure to it growing up. I'm not from a real estate family. My dad was in computers. I was more the computer guy. Taking apart computers, fixing computers for some spending cash growing up and through high school. And it wasn't until college that I actually picked up the Robert Kiyosaki Rich Dad Poor Dad book, and I got my first little exposure into finance and real estate, and that piqued my interest. I got really curious about it. I started digging deeper and deeper and deeper. I even went so far as to get my broker's license in 2009. About 5 years after I graduated college. And then as my career progressed on the technology side, my plan was always to make my money in tech, but invest my money in real estate and grow my wealth as part of my plan and strategy for retirement. But what I was not expecting was to have a friend of mine approach me with an idea. And that friend was Jillian Hellman, who's the CEO of RealtyMogul. And the idea was that for RealtyMogul, which offered me an opportunity to marry my passions for both technology and real estate, and had a blast building that. Did some really amazing and cool things there. And so, and then through that experience, I got a lot more exposure into real estate, started investing, bought my first apartment building about 5 years ago. I also own another house that was kind of the buy, rehab, refi, rent strategy, which
the old
is
BRRRR strategy.
The BRRRR, yeah, exactly. So follow that one. Layered on some short-term rental operations on top of that. I've done a 1031 exchange. I've invested in First Trust deed notes. Hard money lending. So I've kind of sampled across the spectrum. So
that's cool. So just to get a little bit granular, because there's a lot of investors that listen to the show, in terms of the first apartment building, what kind of deal was that? What did that look like? From kind of first looking to acquire and then actually purchasing.
So I took some advice that for my first deal, I wanted to do something that it wasn't super far away, something that I could drive to. Unfortunately, when you live in Los Angeles, there's not a whole lot that's affordable that you can drive to. But I spent, it probably took me about 6 months to identify something that would fit the bill for me. Ended up picking up an apartment building. It needed a lot of work. It had the previous ownership left a lot of deferred maintenance. So I was able to get a good price on it, and which left some money left over so that I could do some renovations and fix it up and offer a better experience to my tenants in that. And then held that for a few years. And, basically it was my leverage had dropped enough to where I thought, okay, I could either refi or 1031 and saw a good asset pop up that was even closer to home that the seller was struggling to sell. So it presented an interesting opportunity, actually. The way they were positioning it, it was kind of weird, and they were putting off a lot of buyers. But I dug in and was able to kind of see the value in that, where I felt like the seller, he was shooting himself in the foot, quite frankly. But anyway, so 1031 into that one, and I've been holding that one ever since.
Okay, so fast forwarding to, for those that don't know, maybe you could talk a little bit about, first of all, what RealtyMogul is, and your role in that space, and maybe a little bit about the kind of juxtaposition that real estate and technology has. And I'm thinking from the perspective of real estate people, quotations, and technology people, and how sometimes it's not necessarily collaborations that you would wish would happen more often than they actually do, and just being on the brokerage side as well. We would love to have more engagement on the technology side, but we seem to be slow adopters of technology. So yeah, maybe we start with RealtyMogul and talk a little bit about that.
So I guess the simplest way to put RealtyMogul, which is at risk of an oversimplification, is to call it crowdfunding for real estate. But crowdfunding in real estate is not exactly a new concept. It's traditionally called syndication. But we wanted to build a marketplace that would showcase some of the best sponsors from around the country and bring their deal flow to a broader audience. And so we built the RealtyMogul marketplace that would allow us to showcase these investment opportunities to our investor users, and allow them to invest with lower minimums than they would otherwise need to do, because we would have collective buying power for our users, getting them better access to better deal flow. And but then also the challenge is, how do you process all this and maintain regulatory compliance? Because now you're dealing with fractional securities, under the purview of the SEC and FINRA. So that was some of the technical challenges that were at the forefront of what we were dealing with. So it was a lot of kind of broker dealer in the cloud kind of automation to make sure that we could fractionalize these securities, but not encumbering them too heavily with additional overhead and expenses that would bring down the rate of return. So it was really about building out the technology so that we could provide better access, but without adding in huge amounts of expense. And so doing something new in that arena. And this was all on the heels of the Jobs Act, which was signed into law in 2012. Which gave some additional avenues for fundraising through expansions around some of the regulatory exemptions that helped us accomplish that goal of opening up more opportunity without an expansion on the cost structure.
So, sir, just a quick question on the exemptions, because you mentioned syndication. A lot of people that we have on are syndicators, and if I'm remembering correctly, whether it's Reg D or some of the other exemptions, with fear of getting too technical, where does crowdfunding today fall under those exemptions, and what does that mean from an accredited investor standpoint if you want to invest in a crowdfunding kind of environment like RealtyMogul?
Sure. Yeah. No, great question. From my perspective, I would have loved to have seen more expansion out of the regulations, because you do bring up a good point in that distinction between accredited investors and non-accredited investors. And for the benefit of the listeners who may not know, there's a definition of an accredited investor where there's either an income or a net worth threshold. So, as much as we would love to be able to bring the best investments to everybody, the regulatory body will prohibit some people from being able to participate in them, just out of an abundance of caution of keeping people out of deals that may be too risky for their personal financial situation. So we had to work within those guidelines. But yeah, you're right. Reg D is a very common exemption that's utilized in the space. It's just tried and true, very well tested. There's a lot of clarity with the mechanisms there. The downside is that it does keep out non-accredited investors. Even if you utilize what came out of the Jobs Act, the Reg D 506C, which allows you to do general solicitation, where non-accredited investors can see it, but they still can't buy it. But the best thing that came out for non-accredited investors was the Regulation A+, which was kind of a term. It was technically Reg A, a Tier 2 exemption, which expanded the original Reg A exemption, which allowed more capital to be raised by an issuer of a security to non-accredited investors. It almost like a mini IPO in a way. So a little bit more regulatory overhead, a little bit more cost structure for the deal maker here, but it allowed greater expansion. And those are really just kind of that's the tug of war that you always kind of see in the space is the regulatory cost, but then the openness and availability to the end consumer, and trying to balance those out as best as you can. So us at RealtyMogul, we did both Reg D and Reg A Plus. We had products that we launched to try and meet the needs of everybody.
Yeah, so that's interesting because I'd always heard kind of D and B. I had never heard of A Plus. So in terms of kind of the nuts and bolts of actually soliciting, or if you were soliciting people to invest, I'm assuming you did it on a fund basis, or was it done on a property by property basis?
Because Reg A did carry a larger regulatory burden and therefore cost more.
Yeah. It went for
doing
the
it. Yeah, we had to do it as pooled vehicles, because individual assets, I mean, unless it was just like some crazy huge asset, it wouldn't be able to support that cost. I mean, unless people are interested in negative yielding investments, which I'm pretty sure
best.
Yeah, exactly. Everybody loves that.
Yeah, that's cool.
But Reg D, because it's a very kind of like the give and the take again with the regulators, you're dealing with only accredited investors, so your oversight and expense around that is lessened. So we could do single asset offerings, but we would do those Reg Ds. So we had our single purpose vehicles doing single assets using Reg D, and we had our pooled vehicles with multiple assets via Reg A Plus.
I'm always fascinated, like I said before, in terms of the technology, kind of bridging real estate and technology, because like you said, a pretty vanilla version of this is what we always used to call syndication. And oftentimes that was one or two individuals, sponsors tying up a deal and saying, all right, now we need our money. In terms of the actual company and how you started it, did the technology come first? Did you build the platform itself, or did you have the vision with real estate and raising capital, and then the technology followed?
So, I mean, I guess it all kind of happened at the same time. I mean, the guiding vision was, democratizing access to the best commercial real estate investments that the average person just doesn't have access to. I mean, unless you know a guy, or you're, really tied into a certain network, or you're exorbitantly wealthy and people are hounding you anyway. The first step is just getting access to deal flow to people. So that was kind of one of the guiding lights, and then reducing the barriers to participating in that deal flow. So accumulating people for that buying power. So, if you were to buy into a syndication that might have a $100,000 minimum check size, we could stack together a bunch of investors throwing in $5,000 each, and then our SPV we'd wrapper them into would be able to meet that $100,000 minimum check size. But the technology was critical from the very beginning, because in order to do all of these things and keeping our costs down, because introducing that additional layer, we didn't want to make it so that like, oh, well, great, now we're getting access to deal flow, but it's now getting beat up to a point where it's no better than what I would have had access to anyway, or whatever. But so I guess they went hand in hand. The overall vision was set from the outset. It was guided by a few basic principles around providing access, reducing barriers, and giving people a better opportunity. And leveraging some of the evolving regulatory landscape to that effect as well.
One final question just on RealtyMogul, and I want to talk about what you're doing right now, but I'm always interested because usually any team has their strengths and weaknesses. With syndicators, there's a lot of guys and gals that can sell deals, administering deals, and being with them over the lifespan of the deal oftentimes takes a different skill set. So I'm always curious from a crowdfunding perspective, did you find that those were challenges that you had to kind of hire up for once you actually had all these investors, and now it's not just about finding the deal, it's about distributing the profits, actually having an investor relations personnel. What was that experience like?
Yeah, no, actually, it's something I'm very proud of what we accomplished at RealtyMogul. I think we did a phenomenal job there. The CEO, Jillian, she was very focused on credit quality as well. And I think has been to the benefit of everybody involved. But you're right. I mean, you can't just say, oh, here's some deals, have at it. There's a lot of different moving parts. So as you mentioned, investor relations is critical because you want to have a good customer service and support. So your investors that are coming in, being able to answer their questions, helping them navigate the process. Then there's your operations team, which is responsible for making sure that the T's are crossed and the I's are dotted. And furthermore, that, we're not letting people get into deals that they shouldn't be getting into, or just, facilitating that flow and making sure that we're meeting our regulatory duties as well. And then asset management on an ongoing basis, holding the sponsors accountable, making sure that they're delivering on their promises with what they were pitching with their investment opportunity to begin with, stepping in if needs be, or acting as a resource to help, whatever we can do to influence the best possible outcome for those investors. And so those were three major moving parts that were all kind of user facing. And then of course, on the accounting and the tax side of things, making sure that we're processing things accurately and in a timely fashion for our investors as well. So yeah, it did require having specialized departments staffed up with experts in their field to make sure that everybody was rowing in the right direction to the best outcome possible for our investor base.
Sometimes we talk to crowdfunding companies and they actually sponsor some of the deals. Does RealtyMogul act as that conduit, or do they actually go and sponsor some of the deals, or I guess pooled funds?
Yeah, actually, RealtyMogul, and that's actually a more recent development that has been acting as a sponsor, having an acquisitions arm that has been identifying good assets according to the strategy that they're pursuing to offer that deal flow to the investor pool as well. So yes, RealtyMogul has been doing that as well.
Turning to a bit of what you're working on right now for the listeners' benefit, maybe you could talk a little bit about where you're at right now. Not everybody will be starting companies as large as RealtyMogul and then moving on, to start another company, which hopefully is as big, if not bigger. But Joyhub, why don't you talk a little bit about that, and what is Joyhub?
Anybody who's interested in learning more, you can check us out at joyhub.io, .io, not .com. Little tip of the cap to the technology.
I was going to say, you're a tech company one.
Yeah, exactly. We'll probably pick up the .com at some point.
I was going to say, if only WeWork had followed that advice, they might be in a different place. But
it is kind of funny the impact that WeWork did have on the prop tech space as a whole. But man, that could be a whole nother podcast.
Oh, for sure.
So forgive me if I don't pick up on that thread. But yeah. So again, back to my love of technology, and similar to how one of the big the big thrust for technology around at RealtyMogul was on the operation side, being able to be more efficient, doing more with less, keeping costs down, because that ultimately benefits people on whatever side of the equation you're looking at. So those kinds of patterns exist all over real estate, where there's inefficiencies that exist, or there's pain points that exist, and they can be operational. It could also be inefficiencies that lead to missed opportunities. And so I see this all over the place, and real estate is a little slow to adopt, but it's also because there's a lot of moving parts. There's a lot of complexities in the business. And so there's a certain cautiousness, which I'm not gonna argue against that. But it does mean that there's always opportunities for continuous and never-ending improvement. So what we're doing with Joyhub is building out technology that is aimed at helping around operational efficiency. So my partner and I, we really were kind of building it for ourselves, realizing that our property managers are making just a ton of money managing our properties. And, for the most part, it's things where like, okay, look, I need a property manager. In the case of my partner, she's got a property in Washington, D.C., so having boots on the ground locally is a big piece. But you start to realize that, with the right technology in place, you can self-manage to great effect. And we wanted to build technology for operators so that they could, for owners, so that they could operate their buildings without a property manager. And so, yeah, you can check it out at joyhub.io, see our technology. We help everything from taking rental applications, onboarding new tenants, collecting rent, processing maintenance requests, so on and so forth. And also a big key component to the opportunity that we see in the space is around data. I mean, you look at consumer products, and in many ways, I take this tech company ethos and I apply it into real estate. So tech companies, they're all about data-driven decision making, knowing your customer and analyzing their behavior and their desires and preferences, and modifying your product to better suit those needs, and evolving as a business to get better market share and things like that. And so, I mean, you couldn't imagine a company like Amazon not having really clear data about their users and making decisions based on that. And sometimes I see a lot of real estate owners flying blind in that regard. At the end of the day, you can set it and forget it with certain things. But I see that as a missed opportunity. You're leaving money on the table. You've got some operational inefficiencies in place that can be solved with the intelligent application of technologies. So big driving force for me is also on the data side, being able to understand in real time what are the driving forces for your tenants, what are their preferences, and being able to collect that information and have that in a centralized repository so that you can analyze it and figure out things about what's going on, and for the sake of COVID-19, there's an operator that we're working with who, one of the big questions that he wants to be able to answer, or just kind of an anecdote, he's like, hey, look, if I had a better data foundation, I would have been able to run some analysis and say, okay, what are the odds that any given tenant is going to be able to continue to make rent payments in light of the pandemic that's going on? And that would have been incredibly valuable information for him. But instead, he's having to react as things unfold, instead of being able to be proactive. And so that on the data side, there's a lot of interesting things that can be done there from a collection and analysis perspective that we're going to be tackling with Joyhub as well. So not just the operational side, but also the data side.
So with something like Joyhub, or just any automated system when it comes to property management, which, first of all, I completely agree with you. We just had a gentleman on the show that actually sold a property management company, founded pretty much trying to solve the same problem that you were talking about. They had a lot of single family houses, which is one of the hardest really to scale, right? When you don't have everybody under one roof. So he had built a property management company, the very old fashioned way, in terms of, building a team of 20, 25 property managers, boots on the ground type of thing. So from the perspective of kind of, maybe call it digitizing it, or basically putting systems in place so that you don't have to constantly have hires of actual individuals working for your company. What are the areas that you found you overcame the most, or you find that they're most easily solved by technology, and which areas, maybe it's screening tenants or somebody actually going to site to deal with a tenant issue? What areas did you find that you foresee the most challenges with?
Let's see. So the areas that we've seen the most benefit are, I'd say, on the communication side. Many tenant issues can trace their roots back to just communication, whether it's communications of expectations or communications of things on the timely manner. But making it easier to facilitate that communication between landlord and tenant is an area that we've seen a lot of dividends get paid out. One of the challenges that we see, you can't 100% automate everything. There's always going to be some outlier use case where you'll need to have some kind of human involvement, exception handling, as I like to call it. And so being able to streamline the process, but still kind of codify what happens under certain circumstances to make sure things are flowing efficiently. That's always kind of a key challenge that you just got to keep your eyes open for.
So in terms of from Joyhub's perspective, would the technology, would that be utilized by a current property manager at a lower percentage of, say, gross income or gross rent because most of the work is done for him or her? Or would it be completely replacing the property manager on a given property?
Our technology, I do want to just mention that our Joyhub Basic is free. It doesn't cost anything. So whether a property manager sees value in using it to augment their operations, or whether an owner operator wants to use it to support themselves as they attempt to self-manage, we actually offer additional services on top to the tenant and to the landlord. That's how we monetize it. So that's how we make money to keep our lights on. So, processing rental applications. We have a partnership with a renter's insurance company as well. These are just a couple examples of how we're able to generate revenue. But from a go-to-market strategy, we're more focused on the owner-operators, the people that want to self-manage, rather than property managers, because there's some complexities in that equation. Sometimes property managers find ways to kind of monetize their own services in the same way that we're monetizing our technology.
Yeah,
and so there kind of becomes this stepping on each other's toes kind of a thing. But we've got enough runway with owner operators themselves, and empowering them to be able to recapture that single largest expenses that they have in managing their building in a way that they're not going to bat an eye at how we monetize it. It's just a more path of least resistance. And so for a company at our stage and our size, I'll tell you, just more generically speaking, from a startup entrepreneur perspective, maintaining focus is one of the hardest things you can to do, but it's also the most important thing to do. Yeah. You gotta plant a flag and you gotta stick to it. Trying to be too many things to too many people ends up making you nothing to anybody. So we've really kind of drawn our line in the sand there, at least for now. But that's not to say that we're ignoring property managers. We definitely want to work with them. We're always looking for ways to add to that value proposition there as well. But it is the owner operator that we're more primarily focused on. So
for the listeners that, for instance, have apartment buildings or a couple single family homes, are there asset classes that is not conducive to Joyhub? Like if you have somebody that owns maybe an industrial unit or a office commercial space, is there an asset class that you guys don't focus on? Or
great question. And yes, again, back to focus, it is just rental housing. So not necessarily just apartment buildings. SFRs and the plexes are all fine. But if it's not something that you're renting for somebody to sleep in, then that's not that wouldn't be appropriate for what we're doing. We're focusing on that.
Okay, yeah. So that's 90% of the listeners. It's going to be either multi-family residential or single-family residential, and so that's interesting. I mean, I feel there are a lot of individuals in that snack bracket that end up hiring property management because not that they can't manage the buildings themselves. It's just that they think it's overwhelming and they've never done it before and don't see tools like this that can help them with that. And what I've seen oftentimes is, whether you're getting Fannie Mae, Freddie Mac, or you're in Canada, CMHC loans, any government loans that have strings attached to them, for instance, having to do quarterly financial reports, as well as, say, having property management required for a year. You often see times that those individuals who would have self-managed after that first year, they never go back to self-managing, because I would venture to guess they don't see that there's tools out there that can assist with that.
Right. Yeah. No. It is. And even your loan. I mean, the loans on my properties, I've got annual financial reporting I need to do. So it is important that as part of your technology ecosystem, you do have that accounting ability. For what we're building with Joyhub, the way it exists today, is it's an engagement tool that exists between the landlord and the tenant. So we're primarily focused on that user experience so that you can, again, back to how I like to apply the technology ethos to the real estate space. So I like to think of it in terms of a tech company like Facebook. They think about, oh, what's their user experience? How do people log in? How do they interact, engage, whatever. Insert any tech company here. That's how they approach the development of their product. In real estate, we'll think about landscaping and design, and maybe even if it's furnished. But beyond that, the overall experience, like what is it like, sometimes gets overlooked, and I think it's unfortunate because if we put ourselves in the tenant's shoes and we really understand what it is we're asking of them on a day-to-day, because they have to uphold their end of the various workflows, whether it's rental payment or handling maintenance or filling out paperwork, this, that, or the other.
That would be helpful for the landlords.
Yeah, like sometimes you're really just like, oh my God, I need my tenants to do something, and it's and it's like pulling teeth. Yeah. But if you think about the user experience and how you can elevate that experience, make it easy and frictionless, and make it more engaging, these are ways that you can make allies out of your tenants. These are ways that you can have a better user experience, which translates into less turnover, which translates into being able to command a better rent amount and better monetize your assets from an ongoing cash flow perspective. And then it's just less brain damage for everybody involved. And so that's where we sit there. There are also I would say you would use Joyhub in conjunction with additional technology to satisfy that financial reporting requirement. We would work in concert with something like that. In the future, there will be feature sets that may move into those swim lanes. But again, at our stage with our focus, it's about engagement and interaction.
Yeah, that was actually going to be my next question. With me, for instance, and I know a lot of people using QuickBooks for, say, their accounting. It would be something that Joyhub would be something in conjunction. It wouldn't be crossing the financial reporting side yet, as I understand it.
Yeah, exactly. So, like, if you want to get data about your assets or your units or your tenants, payment history, things of that nature. That exists inside our technology. It can be married into accounting technology so that you can generate those reports.
And I always found it interesting too, because when we would hire property managers, they would always want to foist the accounting and financial reporting technology that they used on us, and we would always push back and always felt surprised that they would feel. Feel surprised that we'd push back, because we'd want to control that component of it, where the operational side, we would be able to have that done externally. Justin, maybe you could take us through, if somebody is listening today, they were looking at adopting this or trying it out, say, with the free software. So they'd go to Joyhub, and then what would be the next steps? How would that work?
Yeah, sure. So you can go to joyhub.io and click the register button on the homepage to create your account. From there, you'll just provide us with some basic information about yourself. And then you can start to add in the information around the assets that you're managing, and then the units within those assets. And again, if it's an SFR, that may just end up being one and the same. You can then punch in your tenant's contact information, email address, and phone number. Our system will automatically generate their user accounts and invite them to set their passwords. And then everybody involved can link their payment sources to the system. So you as a manager would want to link your bank account so that you can receive rent, or when somebody pays a rental application fee, you get your portion of that fee. And your tenants would similarly link their bank accounts to set up their auto pay for rent. And it's all very straightforward. And I'll even offer, if any listeners are hearing this and they're doing this, by all means, email me, justin@joyhub.io. You can call us on the number listed on the website, ask for me. I'm available, happy to talk. I love talking to users because honestly, I thrive on getting direct feedback. I like to, again, speaking about data-driven decision-making, I'm pushing this on real estate because as any good tech company entrepreneur knows, it's got to be data-driven decision-making. And I like to get that feedback from our customers to heavily influence our product roadmap so that we know if you want to see something built, ask me, I'll build it. Simple as that. But yeah, that's it. You set up your assets, you set up your units, you can set up any existing tenants. If you've got vacancies, it's slightly different. Instead, you indicate that it's a vacant unit. You define your security, what the asking rent and security deposit are going to be, and some additional variables. It's maybe like 5 or 6 different questions you got to fill out. And then we generate you a unique link that you can drop on your rental listings, or you can text to people when you do site tours. And then they can click through and fill out the rental application, attach whatever documents you maybe want out of them, and then they pay their rental application fee. We deduct our fee from that and then pass the balance onto you. So if you set the rental application fee greater than what your cost is with us, then you can take in some cash to cover the overhead of processing the rental application or whatever your cost structure might be. That is, neither here nor there for us. But that's it. And then at that point in time, your tenants are able to pay their rent. They can submit maintenance requests and communicate with you as a landlord. And we're constantly pushing out new features. Our product roadmap involves a lot of quality of life features that make things better for the tenant, make things better for you as the operator. There's a lot of integrations that we're building out. So whether you're using, so even if you are a larger operator and you are using an existing backend property management system, we'll be integrating with that so that the onboarding process can be even easier. Just a one-click automated onboarding where we can scrape the data from whatever system that may already have the information we'd be needing you to manually input. I'd like it to just be as easy as that. You just say, hey, look, here's what we're using. Here's how you can access that data. And then we do the rest. Yeah. Make it real simple. And I don't know why it shouldn't be. I mean, at the end of the day, it's 2020. Technology is incredible. The things that we can do, the sky's the limit. I mean, it's really just limited by our imaginations. So that's really my vision for the future, that this can plug in to your technology ecosystem and we're off to the races. You start to see the efficiencies, the experience of yourself as well as your tenants and everybody involved is better.
Nice. Well, frictionless is the word I took out of that. And that sounds like a great goal to have when it comes to relationships with your tenants and landlords, especially given kind of what we're going through right now, where I think if there were any pain points, they've been illustrated during this time for a lot of landlords and for a lot of tenants. Well, that's great. In terms of, Justin, you mentioned how people can get a hold of you. Is there any other areas online that you would point people in terms of whether it's social media or directly to the website? Just let us know and we can put a couple links on the show notes.
Yeah. I mean, we've got our YouTube channel. My partner Liz does some great, quick bite property management tips that I've been enjoying myself. We have our Instagram feed, which we like to pepper in just some jokes here and there too. So I try to keep it fun a little bit while we're at it. And then LinkedIn, Facebook, all the above. We've got presences there, and definitely would appreciate any follows and likes or engagement there. If people are wanting to connect with us, we're out there. And then of course we've got our general inbox, just hello@joyhub.io. Any question that anybody has, we'd be happy to answer and work with anybody on getting them onboarded.
Okay, thanks so much for watching. If you have any questions, comment below. If you like it, like it. If you're not subscribed, hit that subscribe button. And if you want to find more episodes of the podcast, type in Working Capital, the Real Estate Podcast, wherever you get podcasts. Take care.